Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Did they let you come in later today because you got a longer day?
I wish they did, but no, I was online at 5 a.m., Carol.
She's got a long day. She's a trooper. Kriti Gupta with me on this Wednesday in for Tim Stenovic. Coming up, this is a story that was on your radar we're going to get to.
Yes, I'm all about the geopolitics. I'm all about the markets, and Russia is very on the top of my radar. They're in talks still.
Yep, we can't ignore this. All right, we'll get to that in just a moment. First up, though, back to the markets, our top business stories, and Doug Krisner.
Hey, we're struggling just a bit here after some early session strength, Carol and Kriti. Dow Industrial Average right now is positive, but barely. And in the broader market, the S&P right now holding on to a gain of only around 0.3%. We were up more than 0.7% earlier. And in the NASDAQ market, the composite index higher by about 0.4%. So the reading on retail inflation was pretty much exactly what the market was looking for. On an annualized basis, CPI jumping 7% for all of last year. For the moment, the data seems to fortify the bet on the Fed raising rates beginning at the March meeting. If you look at what the bond market seems to be telling us, a 90% probability of 4 rate hikes this year. Something else to consider when it comes to the Fed, the Beige Book. It indicates the American economy grew at a modest pace in the final weeks of last year. However, businesses' expectation for growth over the next several months, that seems to have cooled in a few places across the country. 10 of the Fed's 12 regional banks say the Omicron variant was affecting activity and adding to challenges in the labor market. You look at the bond market right now, we've got a 10-year yielding 172. And this relationship between yields and the dollar, that's breaking down. We've got a lot of dollar weakness today with the Bloomberg Dollar Spot Index down about 0.6%. That's right around the 2-month low. We've got a rally going on in the euro and the Japanese yen, as well as the offshore Chinese yuan. We'll talk more about markets in 15 minutes. That's your Bloomberg Business Flash.
If you promise, you better hold to it, Doug.
I do.
Okay, I know you do. All right, crossing the Bloomberg terminal, just want to mention a headline. Microsoft hiring a key Apple engineer, luring away a veteran semiconductor designer from Apple as it looks to expand its own server chips effort. Giant hiring Mike Filippo to work on processors within its Azure group, said the people who asked not to be identified because the move has not yet been announced. Microsoft spokesman confirming the hire Filippo, who has also worked at ARM Limited and Intel. Just a quick check on what we're seeing for Microsoft shares on this Wednesday. Stock up about 1.2%, but it's off its highs of the day, Kriti.
Yeah, you know, it's fascinating when we talk about the chip space. So much turnover in big tech and chips specifically. Also a ton of developments when it comes to what's going on between the United States and Russia. Geopolitics, once again, at the top of the agenda. And right now, you do actually have the U.S. and Russia talks ending with no signal on what Vladimir Putin is going to do next. For the latest on that, we bring in Nick Wadham. He covers foreign policy here over at Bloomberg News and joins us on the phone from Washington, D.C. Nick, thank you so much for joining us. Tell us what the latest is on those talks.
Well, essentially what happened today was there was a 4-hour round of talks at NATO in Brussels. So all 30 NATO members had their say. Russia also had its say. And what we were told from the U.S. side is that essentially they got what they wanted to achieve done. So all the NATO members came in and told the Russian representatives to their faces, listen, there is no disunity among us. We are all presenting united front. And that on the issue there chiefly is that NATO has an open door policy. So any country that wants to join NATO will be allowed to. NATO is not going to revert to old rules from 1997, where the membership roster was smaller, and they're not going to tell Ukraine or Georgia or any of these other former Soviet states that want to join NATO that they're not allowed to. So rebuffing a key Russian demand. Of course, the question now is, where does that leave us? And it looks like we're between a rock and a hard place. Neither side says they're willing to budge on their core demands.
Yeah, and that's really understating it there. What's interesting is at the core of this is a potential invasion into Ukraine. That's really what's from my understanding, is what the Biden administration is concerned about. Carol, 10 years ago, I could have gotten 30 rubles for $1. Now I get 75 rubles. All of that is thanks to economic sanctions on Russia in 2014 that were never lifted. Nick, just how much more damage can the Biden administration, how much more pressure can they put on Russia right now?
Well, they say there's still a lot they can do. So we know some of the ideas they're thinking about if Russia does go ahead with an invasion would be blocking Russia's ability to clear dollars, also impacting its ability to tap the sovereign debt market. Even more drastically, they could cut Russia off from the SWIFT financial system, which would basically make it impossible to conduct financial transactions for ordinary Russians. The thing they're trying to balance there, of course, though, is that European countries are very afraid. Listen, if you essentially drop a sanctions bomb on Russia and devastate its economy, well, there's going to be collateral damage. There's going to be blowback. That's going to hurt our economies a lot as well. So, as always with the sanctions debate, what you have is this desire to go as hard as they possibly can while recognizing that there could be a lot of collateral damage from that on other countries, including the U.S., frankly. So that's the debate that's happening right now.
Yeah, those emerging European countries in particular have to be watching closely, already fragile getting into this new year. Nick, I do wonder, is NATO really united against Russia? As you just said, they're watching very closely economic pressure on Russia and how much runs over to the rest of Europe. Will they stay united, or is there a breaking point for them as well?
Well, there are a lot of potential fissures. One is, what if Russia doesn't go ahead with an invasion but goes ahead with something, what they call a hybrid attack, so cyber attacks, maybe assassinations, who knows what else, continued disinformation campaigns, things like that, where it wasn't such an obvious action that then wouldn't trigger an immediate response. So there would then be a lot of debate about what to do next. The other issue is that open door policy. So while, yes, in principle, NATO countries say that they have an open door policy, when it comes down to brass tacks and you look at some of these countries, France, Germany, Spain, some of the others, they really do not want Ukraine to be part of NATO anytime soon. And the U.S., frankly, has signaled as well that this would be a very long process. It would take years. So there is some division there about whether they actually want Ukraine to uphold the principle they say they all swear by.
Hey, Nick, really quickly, 20 seconds here, 25 seconds. Do we know the real intentions of Russian President Vladimir Putin toward Ukraine?
Short answer, no. And that's really in part what these talks were designed to achieve, is figure out, does he actually want to invade, or is this whole thing just a big bluff? And as we heard from the Deputy Secretary of State today, they really are no closer to answering that question.
All right. Sounds like more talks to come. Nick Wadhams, thank you so much for getting us up to speed. Nick is foreign policy reporter at Bloomberg News, on the phone from Washington, D.C. You know, important story, and Creedy, when we think about how 2022 will play out, we're going to get into the cover story of Business Week magazine. A lot has to do with monetary policy and inflation, but it's also what goes on in terms of foreign policy and foreign relations.
Yeah, remember when Chairman Powell was looking at cutting rates because of the trade war with China?
Right, like don't forget about that.
Yeah.
All right, let's get back to world and national news. Over to Nancy Lyons. She's in our 99.1 newsroom in D.C. Hey, Nance.
Thanks, Carol. Well, we're not out of the woods yet. Federal health officials say the number of new COVID cases is still on the rise across the country, with CDC Director Rochelle Walensky calling it staggering. But despite the spread of the Omicron variant, the White House team says it's not necessary to lock down schools and businesses. To help matters, Response Coordinator Jeff Seitz says they will increase the number of tests provided to the nation's schools.
So today we're taking additional actions, including sending 5 million free rapid tests to schools each month, providing another 5 million lab-based tests each month.
Seitz says the goal is to ease supply shortages and to promote the safe reopening of schools. Former President Trump is calling politicians gutless if they refuse to say if they've received a coronavirus booster shot. He made the comment on the conservative network One American News. Trump has already revealed he received a booster. 2 weeks after his death, lawmakers are paying tribute to late Senate Majority Leader Harry Reid as he lies in state at the Capitol today. The Nevada Democrat died in December after a battle with pancreatic cancer at his home. House Speaker Nancy Pelosi spoke at a special ceremony.
God truly blessed America with the life and leadership of Harry Reid. leader Harry Reid. May he rest in peace.
Pelosi calls Reid a consequential majority leader. President Biden attended a different funeral today, but visited Nevada recently for Reid's memorial service. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Kriti Gupta, Bloomberg Markets. Tim Stanovic is off today. A story that we wanted to bring to your attention has to do with the RBC CEO. We know financial firms facing a major challenge after the coronavirus pandemic shook up the labor market. This is according to the head of Canada's largest bank. And basically that problem is, Kriti, and I feel like a broken record, but they cannot acquire enough talent. This is why they're all like paying up big time, right? Throwing out bonuses. It's like, please don't go anywhere.
Yeah. I'm seeing this and I'm regretting a little bit, just a teensy-weensy bit, that I didn't go into banking because those bonuses look pretty juicy. That being said,
bonuses come and bonuses go away.
Very true, very true. But that's a problem
thing.
You're seeing in Microsoft and Apple and Facebook, even in Silicon Valley, all the way to Wall Street. This is a national and arguably a global problem.
Yeah, exactly. It's interesting, too. And another story, as an aside, Morgan Stanley is going to raise its annual bonus for best performing staff actually tomorrow, by more than 20%. This is coming from Reuters, citing unidentified people familiar with the matter. Bankers in the equity underwriting and M&A advisory businesses are expected to be awarded the highest raises because of the unit's strong performances over the past year. Morgan Stanley, though, did not comment to Reuters, but we have that on the Bloomberg as well. We know M&A was crazy. It was, I think, a record year last year. It's kind of nonstop, and we continue to see some deal flow. But I'm assuming, right, those firms, those bankers bring in a lot of money. It's a relationship. They don't want to lose it.
Yeah, and the key word here is best performing staff. Remember, you are also going into a year that's expected to actually be more and more volatile. When you start to see the VIX increase, when you start to see more volatility in the markets, guess who benefits? It's going to be those traders on the desk. The best profits for the banks came in March 2020.
It's a really good point. Going back to the RBC head, what's interesting too is what you'll see, what kind of competition there might be in terms of cross-border. In Canada, borders are open to newcomers. High housing costs, though, are threatening to maybe scare away some of those workers, but you do wonder what kind of global competition there will be for talent as well, right?
Yeah, and then marry that with skyrocketing rent prices, skyrocketing house prices. There's a lot going on here.
It's tricky. All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The stock market is trading mixed, and we are well off the best levels of the day. The Dow is negative by just about 0.1%, but in the broader market, material shares leading the S&P to a gain of 0.2%, and the Nasdaq Composite is higher by 0.2% as well. So we know now that retail inflation grew last year at the fastest rate in about 4 decades. CPI was up 7% in 2021. Now, markets have been fretting over rising inflation for some time, and the CPI data was pretty much in line with estimates, and that takes us to the bet on the Fed raising rates beginning at the March meeting. That seems increasingly likely, and the bond market telling us there's a 90% probability of 4 rate hikes this year. 10-year Treasury now yielding 1.72%. Let's get to some news coming over the Bloomberg terminal. Microsoft has lured away a veteran semiconductor designer from Apple. Microsoft apparently looking to expand its own efforts in computer server chips. Shares in Microsoft right now higher by more than 1%. To be fair, let's point out that analysts earlier today at both BMO Capital Markets and Morgan Stanley were defending Microsoft's growth prospects and its valuation as well. Quick quote on Apple shares, they are up just about 0.3%. So going forward now, the equity market will shift to focus on earnings. We'll hear from Delta Airlines tomorrow. Then on Friday, it's the banks, Wells Fargo, Citigroup, and J.P. Morgan. Keep your eye on loan growth figures. We'll talk more about markets on the other side of the top of the hour. I'm Doug Prisner. That's your Bloomberg Business Flash.
So much for a quiet 2022, huh, Doug?
No joke.
All right, Doug Krisner, thank you so much. Well, this week's Bloomberg Business Week, it's all about the year ahead. The cover story, the issue, is about the biggest dangers to the economy, the global economy this year. And folks, surprise, surprise, it's really not about COVID. For more, let's bring in our senior executive editor for economics at Bloomberg, head of Bloomberg Economics, Stephanie Flanders. She is with us on the phone in London, along with Bloomberg Business Week editor Joel Weber on the Access line in Brooklyn. You know, Joel, the TYA issue, I love it. It always looks into, what's going to go on maybe and what are the stories that are going to dominate this year. But so much of what happens this year depends on kind of global bankers getting it right. And I'm talking about, we're talking about central bankers getting it right.
Yeah, and talk about a well-timed story, right? Just on the heels of yesterday. And, we try and gaze into a crystal ball as much as we can in this issue. We always feel like whenever we're talking about the year ahead, people are just like, want to always know what's going on with the economy. And I think that is especially true now, living through what we've all lived through, the unprecedented nature of not only COVID, but also the responses to COVID. And now we find ourselves somewhere, hopefully maybe on the back end, and we get to deal with, the aftermath of all of this. But, like you said in the top there, COVID perhaps maybe not the central theme that we have to wrestle with now. We've seen what the response can look like and how we can manage. So Stephanie, over to you. What job is it that the central bankers have to wrestle with now?
They have to work out whether the global economy is kind of, especially the U.S. economy, if you're the Fed, is permanently changed as a result of COVID, that they should really take seriously the idea that people don't want to go back to their jobs, having trouble filling jobs, that we're really going to have inflation kind of endemic in the economy rather than just being this transitory thing, or whether actually we are all going to be going back to normal, the economy is going to be more or less like it was in a year or so's time, and they just need to kind of sit tight and, tweak a few levers and raise a few interest rates, but fundamentally they don't have to grapple with something different. And the risk is that at the end of the year, it turns out that they just called that wrong, that, for example, inflation really is a big issue. Financial markets are losing confidence in the central bank's kind of understanding of the situation, and we face a big problem.
There we go. Stephanie, these aren't exactly synchronized moves when we're talking about central banking. And you have the PBOC, for example, continuing to ease, the ECB essentially pausing, the Fed, even emerging markets, hiking as quickly as they can, or at least that's what the market is telling us they're going to do. How much of that kind of dislocation across the world is a problem for the global economy?
Because those disparate forces this is a new moment there.
Yeah.
Yeah, I think so. And I think that was interesting. One of the things I was sort of thinking about as I wrote the piece is you have on the one hand a kind of familiar dynamic of, if the Federal Reserve raises interest rates, well, it's the emerging market economies that could face the biggest problems as a result of that. They kind of get the long end of that story. But actually, there's a whole other thing going on, which is China's already slowed down a bit. And for the first time ever, really, certainly in living memory, the People's Bank of China is going to do something different from the Fed. They've always had to slavishly follow the Fed because they had their exchange rate tied to the dollar. They've kind of won their own declaration of independence from developing their economy and changing their policies. And they now have the freedom to cut interest rates just as the Federal Reserve is raising them. So that is an interesting moment for the global economy, with the Eurozone kind of staying, as always, a few steps behind, still waiting even for that much inflation, let alone a problem of needing to raise rates.
Okay, so, I mean, Stephanie, the fact that China's going one way, U.S. is going another, but even just the fact that we have, I did a bit of crosstalk there, so forgive me, but the fact that we have everyone not working in lockstep for a change, that is radically different, right? And so what does that start to look like if you're Powell, for instance, and you're trying to control what you can control, but then there's all these other forces that could perhaps work against you? How much of that the calculus starts to have to factor in that stuff?
Well, it certainly affects the way the financial markets think, right? Because you've got the Eurozone more or less on hold, so there is a certain amount of pressure pulling down the cost of money, pulling down long-term interest rates, bond yields, even as you've got the Federal Reserve maybe doing 4, maybe 5, maybe 6 rate rises this year. We don't know. So that is a different dynamic, that we're not all dancing to the same tune as the U.S. But I think it is still fundamentally the case. The most important story is going to be what happens to inflation in the U.S., what happens to inflation expectations. Do people trust that the Fed knows what it's doing? And as a consequence of that, of course, what happens in financial markets.
What's so tricky, Stephanie, right? And the question on your piece is which way to normal. Do we really know what normal? Is it a new normal on the other side of the pandemic? Isn't that part of the problem?
Connection lost.
Yeah, and that's what I found kind of curious, and it made me think about it writing this piece, and I was so glad of the editor asking me to do it just before Christmas.
That's called knowing your audience, Stephanie. Well done.
I look at the forecast, and I sort of thought, it's funny, because I've also written and we've had economic research around the COVID having boosted productivity in some areas. Businesses that had to bring in automation much faster than they expected. Everyone working from home and therefore being more digitally enabled in their work. That this was actually going to make us more productive, weirdly, and almost produce like a COVID dividend. So there was that whole discussion. And other ways in which people felt there was a fundamental change, maybe in supply chains, because of what's happened in China and what happened during COVID. And then you look at the forecasts, and maybe economists are just not very, original or imaginative people, but they're all kind of expecting, despite all of what we consider to be really important changes in the microeconomy, they somehow think the macroeconomy is going to carry on more or less the same after this year. And that does seem like a bit of a disconnect. Like, who's going to turn out to be right? Are we really transformed as a result of COVID, or is this just, a loss of this much less permanent than we think?
All right, we're going to leave it on that note. It's an incredible story, and Jill's right. It's so timely considering hearing from Jay Powell and all these Fed central bankers, or Fed bankers, I should say, this week. I mean, this is really front and center. So an incredible story and a great read and so relevant. Stephanie, thank you. Stephanie Flanders, Senior Executive Editor, Head of Bloomberg Economics at Bloomberg News, on the phone from London. And our thanks to Jill Weber as well, Editor of Bloomberg Business Week, on the Access line from Brooklyn. I love this issue. It's the year ahead. It's looking at what's ahead in the economy, what's ahead in politics, what's ahead in terms of how we consume. It's going to be all in our weekend show, but it's really a really smart issue. And it'll be on newsstands tomorrow. Some of the stories already on the Bloomberg and also at Bloomberg.com. More coming out this week. Good, right?
Yeah.
So much in that story.
So much to the global economy story. We have to, you're going to have to dig it in. I can't even say it in 2 seconds.
And we're a huge fan club of Stephanie. She really is incredible.
We're her biggest fan.
This is Bloomberg.
to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by Kriti Gupta, of course. Tim Stomanovic is off. Carol Masters in the house, of course. And I mean, Carol, as we go across our audiences, TV, radio, YouTube, everyone tracking this 7% inflation number that, well, the market had already digested.
It's like, ho-hum. I mean, taking it in stride. I guess it's to be fair, right? We all know that there's a lot of inflation out there. And I guess at this point, we were talking with Yelena Shaletyeva, Kriti, and she was starting to talk about maybe peak inflation, talking about it maybe by the end of the first quarter.
Yeah, well, let's just talk about the market environment that we were coming into when you see that 7% number, because every time we get a set of inflation data, it comes in with expectations, and then the data comes in and beats it. So you're seeing those high expectations not 100% priced in. So the fact that the economists actually got it right this time, well, no wonder that the market is kind of ho-hum about it.
Credit where credit's due. Hasn't been happening on the jobs numbers of late. Let's have a quick look at what's happening in terms of your numbers that don't lie on your benchmarks. We're looking currently at a 0.2% gain on the S&P 500. Now, that's only up, what, 10 points. Actually, the Dow Jones Industrial Average just slipping into the red as we speak, down some 11 points. And technology back on top, so perhaps that value-orientated trade that we'd sort of come to expect with the energy and the financial names doing well, maybe we just put on pause a little bit as the tech gets back into front gear, up 0.3%, 40 points higher on your NASDAQ. The Russell 2000 also on the lagging of the day, down 0.4%, 8 points lower.
You certainly see that on a sector level as well. In some ways, it feels very reflationary, with materials the best performer. You're up about 0.7%, but discretionary. But then you have technology and utilities and real estate all up there as well. And that's where maybe things get a little bit muddy, but it is mostly green on the screen. Staples and healthcare are the only two remain down at the bottom, but not much, 0.1%.
Yeah, and I'm trying to keep an eye on risk sentiment and try to find the right barometers. I've actually been watching Microsoft a lot because remember, they really didn't participate in the rally or the soft rally that we had the last day or so on the NASDAQ. They're higher here today, but remember, they're only up about 3% earlier today, and they really haven't had a meaningful move higher, really going back to late December. I think it was December 27th when they were up about a couple of percent. So keep an eye on that space. They're up 0.9% here on this day, so relatively strong showing. Dish Network higher here on more speculation about a potential deal with DirecTV, a deal redux, I guess, if you will, up 3%. Freeport-McMoRan, most of the copper producers and base metal producers higher here on this day. Freeport-McMoRan up 4%, and Quest Diagnostics down about 7%, and that's definitely something to keep an eye on. They came out with their preliminary numbers. We've been getting a lot of preliminary reports, Carol, and so far they have not necessarily been good. Still growth, but definitely not what the street was looking for.
Yeah, and I want to dig in also on where you know, copper, the fact that you shine a light on Freeport-McMoRan. Commodities have been on a tear. I want to shine a light on energy. Within that inflation read, in energy was once again the cost of warming your house right now going ever higher with natural gas prices up.
Well, Taylor doesn't
13%.
She just leaves Mocha Bear in there, like freezing.
She doesn't
has a
cool her house, doesn't heat her house.
Built fur coat.
But this is an inflationary pressure story. It is the rents that people are paying. It's the energy that we're all having to pay for. And no wonder Fed Bullard, of course, is currently saying that March rate rise is very likely amid this higher inflation. That's according to Dow Jones.
I love that you mentioned energy. 7 of the top 10 names in the S&P 500 are energy names. I get it, but Hess is up something like 24%. Schlumberger is up almost 22%. That's just this year, so pretty dramatic. All right.
But I don't understand. The Fed backs that out, right? They don't really look at that. So should we back out energy and food from all of the rally that we're seeing in the market?
Doesn't affect
you
on the street, no?
Mocha Bear needs to be warm and fed, right?
Yeah.
No, he needs to be on a diet, actually.
Oh, man, poor Mocha Bear. Listen, let's talk a little bit more about inflation because our David Weston caught up with Brian Deese, of course, the chief economic advisor to President Biden. They talked about inflation. They talked about the CPI print. They also talked about the Fed's ability to contain it and be independent. Check it out.
I think if you look at most professional forecasters, they're continuing to predict that we'll see an easing in price increases and price pressures over the course of 2022. And obviously, the Fed is operating independently, and the president has underscored the importance of the Fed operating independently to take actions consistent with making sure that these price increases don't become entrenched.
And of course, that's Brian Deese, director of the National Economic Council. I feel like entrenched, inflation becoming entrenched. We're going to have to define what that exactly means. It's like the new transitory to some extent, Romain.
It's a new transitory, and I keep hearing people talk about the idea that maybe we've peaked, and maybe that's the case, but I think the question now is how fast do you come down on some of these prices, if at all? The general consensus seems to be that even once we come down, we're still going to be at a baseline that's well above the baseline that we were pre-pandemic. Record levels out there, Carol, for men's apparel, cookware, linen, tools, hardware, supplies, new and used cars, living rooms, kitchens, dining room. So you back out food and energy, and still everything else is higher as well.
Is anyone keeping track of masks? Can I go on about that again one time?
That story's great.
Extraordinary. I mean, whether it be small masks for your kids, ridiculous price increases.
Right. But Amazon. Fundamental word, ridiculous.
Yes, right here, right now, in terms of prices, are we at 95? I call it a technical term.
Like, what's the point that consumers say, enough, I'm not going to, there's some things you don't have a choice, you have to buy, right? But at what point do they start to back off and just say enough is enough? And does that have an impact, Kriti, on those inflationary numbers?
Yeah, and it brings the point, the CPI numbers actually strip out energy and food, but it bears kind of keeping into mind, the food prices are surging. They're surging to the most since 2011. They're getting expensive, and the fact that people are cooking at home more and more doesn't actually help that.
Well, the good thing, though, Taylor, is that when you look at those rent prices, they actually weren't as high as some people thought, right?
Don't even get me started. I made a comment on air, and I've had 2 readers scathingly read in because I was citing someone from Apartment List who said that the numbers are actually 18%. And if that's the number instead of the BLS data, inflation is 10%. So we'll get into the nitty gritty of how the BLS calculates rent. But I believe it was Diane Swank who told us earlier that we're just starting to see the rent inflation being calculated into this. So it may not be peaking, at least if we're thinking about that part of all of this. And I bring it back, Caroline, real wages, negative 2.5%. Yeah. That's everything you need to know about the impact on the consumer.
Yeah, don't be scathing to our Taylor Riggs when she makes these interesting points. But it's true, the inflation part of this story, when it comes to wages, is one we're going to keep a really close eye on. And, well, look at the war on talent. If RBC head is talking about it, if we've got Microsoft luring people over from Apple, people are in high demand, and I'm pretty sure they're paying for it.
Yeah, Silicon Valley, Wall Street really united in keeping their talent. And it actually feeds into, once again, those rent prices, because if you are making more, in theory, then they can charge you more for those shelter costs.
I just want to wait until all of the stimulus is gone, totally a clean economy, and then we get to see some real numbers here. Maybe we're going to have to be a little patient for that. All right, folks, we're going to be back with you at 4 p.m. Wall Street time on radio, on TV, on YouTube. We're going to take you for Beyond the Bell at 4 p.m. Our simulcast coverage will continue. We're going to take you through the close on this Wednesday.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I love hearing Romain talk about pessimists. I love talking with our TV colleagues, but I do wonder, do we need a dose of pessimism? We were just talking with Stephanie Flanders, the cover of Bloomberg Business Week this week, and there's a great stat that's in there that what happens when we truly see the withdrawal of all the Fed stimulus, the Fed stimulus, forgive me, all the government stimulus that we've seen over the last 2 years. Goldman has said that could be a 3% impact on GDP. That's real.
Yeah, and also keep in mind that we are still dealing with this Omicron variant. We had Anna Wong, who's our amazing U.S. economist here. She actually has this GDP tracker that if you actually look at some of the mobility that has actually taken a hit in just this first week of 2022, it's been a 16% drop in GDP. It's still early on those official numbers.
Right.
But it's clear that it's taking a hit.
Right. And does it, we've also seen the stories, right, that each variant, we are getting better and better in terms of dealing with it. Yeah. We've got some tools. We've got a way to figure our way through. But nonetheless, there is going to be some lost economic activity. It just depends on duration again. Same thing with inflation, right? Transitory, pick your word or whatever. The question is how long or how much longer does this stick around, and is there a new normal on the other side?
Yeah, and you were talking about the clean slate and say the Fedapalooza that's really been happening. Well, marry those two ideas. We've only ever done this quantitative tightening one time before, and even that, the results were questionable. So are we going to get a second chance, and is it going to go well? That's going to be at the top of mind for investors.
Speaking of QT, though, the balance sheet this time around was explosive.
Oh, totally.
Right? Yeah. So even though we go back to the financial crisis as a reference point, it's still kind of a different deal in terms of the magnitude of things. And so what happens when you throw on, when you've got to you turn your water off to do some work at home, plumbing, and then all of a sudden you throw them all on and everything's full force. Well, we turn those off. What's the impact? impact.
Yeah,
on the
Romaine was
economy.
right. We are pessimists, Carol.
All right, sorry, everybody. We'll try and be a little bit more optimistic next go-around with our TV colleagues. All right, you're listening to Bloomberg Business Week. Let's get back to world and national news. Over to Nancy Lyons. She's in our 99 newsroom in the nation's capital. Hey, Nance.
Thanks, Carol. We are getting the reaction from the White House to today's latest historically high reading on inflation of 7% over 12 months. Bloomberg's Nathan Hager has more from Washington.
We are making progress. Those words in a statement from President Biden after the Labor Department reported the highest year-over-year increase in consumer prices in almost 40 years. The president's focused on the month-over-month increase of 0.5%. He calls that a meaningful reduction from November's level, with gas and food prices falling. Still, the president says the report underscores that they have more work to do, with price increases still too high and squeezing family budgets. In Washington, I'm Nathan Hager, Bloomberg Radio.
The pressure is on Democratic Senators Joe Manchin and Kyrsten Sinema as the Senate considers voting rights legislation. Senate Majority Leader Chuck Schumer says he has not given up on changing filibuster rules to consider it. He says he continues to talk with both lawmakers. Senate Minority Leader Mitch McConnell, meanwhile, lashed out at President Biden for the speech he gave yesterday on voting rights.
The president's rant yesterday was incoherent, incorrect, and beneath his office.
McConnell says President Biden is dividing the country he vowed to unite. Voters are split on whether the Senate should do away with the filibuster and move to majority rule. The filibuster requires 60 votes in the 100-member Senate to move bills forward. A poll from Politico and the Morning Consult finds 42% support the filibuster, with 30% favoring change. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Master along with Kriti Gupta here in our Interactive Broker studio. My co-host, Tim Stenovic, taking a few days off. He'll be back with us next week. In the meantime, Caroline Hyde over on our Bloomberg TV side just mentioning briefly in our simulcast about the cost of things, specifically N95 masks. This is your most read story on the Bloomberg terminal, I think, in the past 60 minutes.
I mean, just take a look at these prices, right? And we were just talking about this in the break. $79.99 for a pack of 40 masks. That is up from $17 in late November. I mean, the amount here, especially in light of that CDC guidance, that cloth masks really aren't preferable anymore.
Right, exactly. Remember, everybody was making those cute light cloth masks, and everybody wore them. I've been wearing the K95s. Kimberly-Clark has a version of N95, a 50-pack of those masks going for $57.15, compared with about $23 in early October. Some of this data we're getting from the price tracker, Camel, and this is on the Bloomberg terminal. So, you know, what's happening is the potential for a new recommendation from the CDC unleashing that scramble for those N95 masks and boosting their prices. Agency considering changing its guidance to advise that people wear higher quality masks, according to a report in the Washington Post. You know, Kriti, this just reminds me that we just continue to learn things as we go. Same thing with people who get the virus. You know, we used to think nobody young can get it or they're going to be okay. I've talked to a lot of younger individuals who've had COVID recently, and they're like, man, it really knocked me out for a good 10 days or a couple of weeks.
Yeah, so the two factors that really come to mind here is, one, inflation is everywhere, clearly, but it also speaks to pricing power a little bit, especially in light of the fact that these masks, I mean, some of it is mask fatigue as well. I mean, think about that. We talk about COVID fatigue all the time. Some people are just tired of wearing masks.
Yeah, no doubt about it. I've got to say, I'm really comfortable. I kind of like it. It's really cold outside, and I even like it because it keeps me kind of toasty and warm. But
it doesn't nip at my nose. It's handy.
But we know how good a smart mask can make a difference, and so I'm definitely all in on it. Anyway, check it out. Most read story on the Bloomberg. This is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have less than 43 minutes until the closing bell. The equity market is now turned mixed, and we are well off the best levels of the day. Let's get the latest on the price action. Cross to the Bloomberg Macro Squawk Desk. Bill Maloney is there. Hi, Bill.
And good afternoon, Doug. U.S. stocks are quiet in choppy trade today, with the Dow currently down 13 points. S&Ps are higher by 10. NASDAQ is still gaining 36. The U.S. 10-year yield at 1.73%. Gold is up 5. Bitcoin trading higher by 2.5%. And among the main 11 SP sectors, leaders were materials and consumer discretionary. Healthcare and staples were in the red. Leaders to the upside in the Dow, Salesforce and UNH, while Goldman Sachs and J&J led to the downside. And after earnings, Jefferies fell as much as 12%. In other news, Microsoft hired a key Apple engineer to design its own server chips. And Biogen fell as much as 10% on news Medicare limited coverage of their Alzheimer's drug. Wrapping things up, KB Home reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
Bill, thank you. To hear live breaking news right on the Bloomberg terminal, the function is SQUA, then the green go key. I'm Doug Krisner, and that is your Bloomberg Business Flash.
It is indeed. All right, Doug, thank you so much. Well, interesting story that popped up on our radar. It also happens to be in Bloomberg Business Week's Year Ahead issue, which is out on newsstands tomorrow on the Bloomberg and also at Bloomberg.com. And Critty, it's about how there is still no Amazon for housing, but there's some fintech companies, they're working on it.
It's in the works. But I mean, remember, we've had a rough couple of months when it comes to Zillow and some of the other peers. And for more information on that sector, we got to bring in the experts here. And that, of course, is Patrick Clark. He covers real estate for Bloomberg. He's on the phone from right here in New York City. Patrick, thank you for joining us. I loved your story because there's a line that stuck out to me where it said it made sense to order pants online, but many consumers still prefer brick and mortar grocery stores where they can squeeze the avocado and eye the steak. I guess houses are no different. Tell us more about it.
Yeah, I mean, every house is different, just like every piece of fruit, I guess. It's been the great challenge for companies, particularly tech companies, but I guess all companies that are looking for ways to sort of carve out either a small or large niche in the U.S. housing market. At the end of the day, a house is really not a commodity good. Even a sort of mass-produced house that looks like all the houses next to it, like every house has a different view, and every house will, age in different ways. And it's not only for the most part, like literally, do home buyers want to actually go squeeze the house, but it's just very hard to take the human element out of buying and selling one.
So wait, are you saying that there isn't a Carvana approach to buying a house? We can't go to a kiosk and say, yeah, I'd like that split level?
It's really, I love that you said Carvana, because it's how a lot of the companies, a lot of the prop tech, as they call themselves, prop tech companies, a lot of them use the Carvana model as an analogy, which is to say that we started with pants or books and slowly but surely have worked our way up the value chain in terms of the types of goods that we're willing to, that we feel confident buying online, and we have gotten to cars in a way, right? And the bet is that houses are next. It's just that I think that at each new level of value, and it's not just value when it comes to a home. It's value and complication, and there's an emotional component. It just gets more complicated.
What's interesting is, and we've talked throughout the pandemic to real estate agents, realtors, heads of home companies, where they talked about transactions during the deep throes of the pandemic back in 2020, where they did everything online. Everything was a digital transaction. So it can be done, I guess, right?
More and more parts of the transaction can be done digitally, and I think that the pandemic was, I think it accelerated acceptance both by consumers, regulators, that lenders, what have you, like that more things can be done virtually, remotely, right. And so
So I think the pandemic sped this up, no question. But it's one thing to, it's one thing to speed it up, but it hasn't solved the problem.
Kriti, I just want to get rid of that meeting that you have to have with everybody's lawyers, and it's like your lawyers on one side, the sellers on another, or the buyer. Like, I just want to get rid of that part of it.
I have never bought a house, so I cannot relate. Although I will admit, I live in New York City, and I look forward to the days where I can have a white picket fence. That being said, speaking of rental properties, which is what it actually kind of comes to mind as we talk about the pandemic, because a lot of people were actually shopping for apartments via these virtual walkthroughs, and then I wonder how many people actually showed up at the apartment and was like, this is a lot smaller than it looked on FaceTime. I'm curious, Patrick, what's next for this? I mean, is there a solution or is there a money-making prospect when it comes to shopping for houses virtually?
Yeah, I think there's two main ways to think about it. One is, you'll continue to have companies that improve and sort of digitize and bring online components of the transaction. And some of these are the things that we don't really think about. It's like the people in the room at the closing date who, you barely understand who they are, but this guy is, this guy has run the title on the home to make sure that the seller, really owns it, for example, right? And so there's pieces of it that I think can be very successfully brought into the 21st century here in 2022. And there was also a move to put more and more of these services together. So you have brokerages that are real estate brokerages that are hiring, that are buying or building mortgage lenders internally. You have traditional mortgage lenders who are starting to offer different types of bridge finance that would allow a buyer to compete like a cash buyer. You have this idea that you can bring all of these things together, and again, going back to this idea of the closing meeting, that basically to simplify and do more of the transaction online with one company, so the consumer's only dealing with sort of one interface. I think there's some promise to that. One of the challenges is it's a lot of technology. It's a lot of process you have to deliver to the customer. And so the question is, one, can you build it? And two, can you actually make money doing it? And that's the thing that, hopefully we'll see some progress on.
I look forward to the Uberization of home buying. Hey, Pat, thanks so much. Patrick Clark, real estate reporter at Bloomberg News, on the phone from New York City. Check him out at Twitter at Pat_Clark. Yeah, I was really lucky. I actually bought a foreclosure, so it was a lot easier. Dealt with a bank, and it was like, done.
I'm writing that one down for when it's my turn.
You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week. Carol Master along Kriti Gupta here in our Interactive Broker Studio. We're going to do your chart, which I really love because it gets to supply chain concerns.
I'm flattered. I'm so excited.
It's a good, no, it's like so relevant. So we're going to get to that in just a moment. In the meantime, we do want to get you up to speed on the trading day. Doug Krisner, almost done, 29 minutes here.
Yeah, pretty much. And it's a mixed picture. Did you see that the equity market is really off the best level of the day? The Dow's kind of been fluctuating here between gains and losses as we approach the closing bell. In the broader market, though, the S&P 500 positive by 0.2%. The tension, on one hand, we have material shares and consumer discretionary positive. On the weak side, it's healthcare and consumer staples. And then if you look at the NASDAQ market, the composite index is up just about 0.2%. The day began with word on retail inflation growing last year at the fastest rate in about 4 decades. CPI was up in 2021 by 7%. That was pretty much in line with expectations, and it's strengthening this bet on the Fed raising rates maybe as much as 4 times or as many as 4 times in the coming year. Could happen as soon as March, the first move. 10-year Treasury yielding 173 right now in extended trading. Couple of highlights. We have shares in Biogen down by just about 7% right now. This is after the federal government late yesterday limited Medicare coverage of Biogen's treatment for Alzheimer's only to patients enrolled in clinical trials. Also weak today, shares in Jefferies. Stock is down nearly 10%. The firm said fixed income trading revenue during the 3 months through November was down 50% from last year. And as long as we're talking about the banks, we enter earnings season at the end of this week, and on Friday we'll hear from Wells Fargo, Citigroup, JP Morgan. Keep your eye on loan growth figures. 10-year Treasury yielding 173, and crude oil in the electronic session checked at 82.65, so we're up about 1.8%. That is your Bloomberg Business Flash.
All right, Doug Krisner, thank you so much. You're listening to Bloomberg Business Week. Carol Master along Kriti Gupta. We're talking about something totally not market related behind the scenes. That's what happens. Put Kriti and me in the studio. Let's get to a chart that you've got, your chart of the day, because it does get to supply chain concerns.
Yeah. Well, this was, the inspiration. I got a phone call this morning from a producer who said, we want to talk about supply chain concerns. How do you show it in a graph? And I was like, beats me, man. I don't know. Anyway, so I somehow whipped this out. And essentially, what it shows you is, in my opinion, what are the 2 biggest sectors that have been most hit by those supply chain issues. And to me, it's chip makers. We hear about it all the time. Right. Not being able to meet capacity for, say, semiconductors that go in autos, medical equipment, smartphones, what have you. But you also hear it from retailers, right? Nike, Adidas, or Adidas, or whatever it is, however you want to pronounce it. But
Matt Miller would say Adidas.
I'm sticking with Adidas.
Right.
I'm gonna Americanize it. I'm sorry, but that was kind of the story that's taking longer and longer to kind of transport those Air Jordans, and therefore eating into their profits. So I thought I'd compare them and see who has it worse. And right now, the jury is out that it's actually retailers who have it worse.
So you're looking at the equity performance of those 2 sectors.
Right. And we know the supply chain concerns, those margin pressures have been driving the stock for both sectors. Sometimes they don't drive the stock, but for these 2 sectors, they have. And
we have a chart up on everybody. Sorry for guys on radio, but it's up on YouTube. I mean, they look pretty closely correlated, are they?
They are. So basically, the line's a ratio, right? So if it goes from chip makers against retailers, if the line goes up, it means chip makers are outperforming the retailers, and the line does indeed go up, and it didn't for the first part of 2020 because people were spending a lot of that fiscal stimulus that they had, and they were going into e-commerce. But then as you started to see those supply chain concerns kind of hop into chips in particular, it became harder and harder to get a chip, more delay times, and that actually creates relative demand as you have supply lower, right? That's economics 101, and therefore push the stock price up because now these companies can charge more for it, there's more demand for it, and there's a backlog for it that they can now go back to, and that helps their bottom line. But the difference here that really sets those chip makers apart is the fact that the long-term growth case is actually stronger for them. For example, you are now looking at companies like NVIDIA, Advanced Micro Devices, supplying chips, different kinds of chips to say, or Meta, I should say. I was going to say Facebook, now Meta. For the metaverse, you are going to see them kind of hop into the EV boom space and supply that industry as well. And for that reason, they have a better long-term growth case than, say, retailers who are now going to be facing waning fiscal stimulus.
Well, and it's interesting. I think fundamentally, in terms of our world, it's interesting. We had that headline about Microsoft hiring away a key Apple engineer to work on custom chips. And we see increasingly companies maybe not outsourcing chip production, but everything increasingly in our world has some kind of chip in it, right?
Yeah. It's kind of scary how many things have chips in it. If you actually kind of look into it and then look at the raw materials that go into the chips and then look on your handy terminal what those raw material prices are doing, they're skyrocketing, and that's why things are getting more and more expensive. It really brings home the point that this is why a lot of companies are not only bringing their supply chains in-house, but for example, to your point, Microsoft bringing it, and this is part of Tesla's success, by the way, I should add, a lot of their software, a lot of their engineering is done in-house, whereas Ford, GM, they don't have that luxury.
So they don't have to be worried about other suppliers or outside corporations kind of impacting their access to their supply chain. Hey, you mentioned, of course, we're talking about chips as well. We've talked about Intel a bunch this week. Ian King at the beginning of the week, he's got a great story on the Bloomberg, and it's also in the year ahead issue of Bloomberg Businessweek magazine, but talking about how Intel is, you know, they have been for such a long time the reigning king in the semiconductor space, about to kind of hand over the crown to Samsung. But he's also got a story out there, and I think this caught your radar, about Intel having a happy new year so far. Only a couple of weeks in, or almost 2 weeks.
It's been 12 days.
But it's up a lot.
It is up a lot. And what's interesting about Intel is in 2021 and probably prior, it's been having a really tough go of things. They had to kind of basically revamp the company. They lost a ton of market share, not to mention their supply chain concerns. And now they're kind of coming back, building some of that domestic capacity, taking Joe Biden up on his word and saying, let's bring up those plants in Arizona, in Texas. Even I heard, I think, semiconductor development happening in Germany, calling it Silicon Saxony in the Financial Times. And now they're actually revamping it, hiring top talent, snagging a veteran of the industry from Micron as well to become their CFO. So Intel, yes, it's having a happy new year so far. They're making really big changes. Let's see, Carol, if they actually pay off.
Well, and Ian in his story says, in the world of chips, market performance can be a lagging indicator. It takes lots of time and money to design chips, build a factory, ramp up production, and talks about the CEO of Intel. Up until this point, he has been playing a hand that was dealt by earlier executives. Right, so we know this. He's playing catch up, but that's a really good point. I mean, Intel shares already up almost 8% so far, early on 2022, but catch-up can take some time, right?
Yeah, and keep in mind, semiconductors broadly, they're super volatile. Like you thought tech stocks were volatile, or say airlines were volatile, chip stocks are super volatile because it is very exposed to essentially the boom and bust cycle. And then if you look at the chip equipment makers, even more so, those that volatility is just magnified.
Right, and you know, a lack of supply, and then you do a lot of investment, then can lead to an oversupply, right? Which also plays
very fine balance. It can go wrong very quickly.
All right, Kriti Gupta with us and her chart of the day. Be sure to check it out. Right now, let's check out world and national news. Back to DC we go, and Nancy Lyons. Hey, Nance.
Thanks, Carol. U.S. consumer prices soared last year, 7%, the most in nearly 4 decades. That sets the stage for the Federal Reserve to begin hiking interest rates as soon as March. But Bloomberg's Washington Bureau Chief Peggy Collins says economists will not only be looking at what the Fed does.
The supply chain issues, where will that go depending on what happens globally and with the Omicron virus here in the U.S., and then also consumer demand depending on consumer finances. How are they holding up? How are small businesses holding up? And what does that do to the consumer demand that's really been powering this rebound in the economy for the last year or so?
Washington Bureau Chief Peggy Collins says unemployment is down, but the labor participation rate is still lagging. President Biden reacted to the inflation report, saying his administration is making progress, with price hikes for food and energy now rising at a slower pace. Well, the numbers of new COVID cases and deaths are still rising.
The staggering rise in cases, over 1 million new cases each day, has led to a high number of total hospitalizations.
CDC Director Rochelle Walensky says the latest surge is being fueled by the Omicron variant of the virus, but many of the deaths are still attributed to the Delta variant, which is more severe. She continued to urge the importance of receiving vaccines and booster shots. The U.S. and NATO have finished their talks with Russia and have rejected key Russian security demands for easing tensions over Ukraine. They have left open the possibility of future talks with Moscow to discuss other things like arms control, missile deployments, and ways to prevent military incidents. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, along with Kriti Gupta, Bloomberg Markets correspondent, here in our Interactive Broker studio. She is in for Tim Stenovic, who is off today. Hey, one story we wanted to mention, this has to do with El Salvador's president, probably the only head of state in the world, Kriti, who uses public funds to trade Bitcoin with his phone. We've talked a lot about El Salvador over the past year or so, because here it is, you've got a country actually embracing Bitcoin in a big way.
Yeah, comparing it essentially to the dollar, and a campaign that a lot of other countries have looked to do. And El Salvador really serves as a use case as people look to use the dollar less and less, especially these countries who don't want that dependence.
So how's it going?
Well, the purchase that the president made, he said, would have cost the Central American country about $71 million. I mean, imagine doing that kind of transaction, once again, with public funds on your phone.
Right.
And this is, of course, based on Bloomberg analysis with an acquisition price of about $51,000 per token. And they, of course, used the one and only Twitter to kind of time and date this. But Bloomberg basically saying that did cost it about $71 million. That being said, the investment is now worth about $61 million, so about a 14% loss for the country of El Salvador, all through Bitcoin.
You know, we talk about getting back to normal. Like, there's nothing normal about this. But I understand, like, disruption, innovation, and we're still figuring out in terms of digital currencies and how it all works out. It definitely feels like we've taken some major steps forward in terms of legitimization. But there, as you mentioned, the process that he's done, shrouded in secrecy. You mentioned he's putting this out on Twitter, and I guess, you know, this is still a very volatile currency, or I don't even know whether to call it a currency, commodity, collectible, I'm not quite sure how to call it, but nonetheless, a lot of volatility, and as you mentioned, can lead to losses.
Yeah, and Carol, I'm just going to put my markets hat on for a second. It is wild to me that a sovereign bond can be exposed to Bitcoin in this way, and that is actually what's happening. These are public funds.
That's a really good point, because something we think about sovereign bonds is a certain amount of predictability with it, even though there can be volatility there.
Right.
You're listening to Bloomberg Radio.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We're less than 13 minutes away from the closing bell. The equity market is higher, yes, but well off the best level of the day. The S&P had been up by as much as 0.8% earlier. Right now, that gain is less than 0.3%. The Dow is holding on to a gain of around 0.1%, and in the NASDAQ market, the composite index is higher by 0.3%. So the day began with word that retail inflation grew last year at the fastest rate in nearly 4 decades. Consumer prices measured by the CPI jumping 7% in 2021. As shocking as it may be, that was roughly in line with estimates, and it underscores this notion that the Fed is going to begin raising interest rates perhaps as soon as the March meeting. Today, 10-year Treasury very little changed after chopping around a bit. Last quoted in New York at a yield of 173. Highlighting a few stock stories, we'll begin with Biogen shares, right now trading lower by just about 6.7%. Late yesterday, the federal government limited Medicare coverage of Biogen's treatment for Alzheimer's to patients enrolled in clinical trials. And we have shares in Jefferies down more than 10% right now. The firm saying fixed income trading revenue during the first 3 months, or during the 3 months through November, tumbled 50% from last year. Elevated crude oil prices, that came after the American Petroleum Institute reported a drop in crude stockpiles here in the U.S. beyond what was estimated. In a extended trading right now, we've got WTI at 82.53. We'll talk more about markets on the other side of the top of the hour. I'm Doug Krisner. That's your Bloomberg Business Flash.
We will indeed. Doug, thank you so much. All right, folks, it is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Lithuania is a small country with a big problem. China has brought its massive economic leverage to bear on the tiny Baltic state in recent weeks, after Taiwanese officials opened a de facto embassy in the Lithuanian capital using the island's name. In response, China downgraded diplomatic relations with Lithuania and at least temporarily cut off trade. Now Beijing is reportedly warning multinationals to excise the country from their supply chains. Lithuania's friends should do more to help it withstand Chinese pressure. The EU, for example, could compensate businesses hurt by Chinese restrictions, and, with the US and other partners, help find new markets for Lithuanian goods. Lithuania won't be the last country to learn the costs of crossing China, but prudent concerted action can lower those costs, and maybe encourage Beijing to find other ways to register its displeasure. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. About 10 minutes left in today's trading session. We've seen some volatility this week, but certainly a lot more optimism. Bouncing around, though, today, and we are a little bit lower on those major equity averages. So let's get to it. Let's get to the Drive to the Close. Aaron Kennan is back with us, co-founder, chief executive officer at Clear Harbor Asset Management, approximately $1 billion, a little bit more than $1 billion in assets under management, on the phone once again from Stamford, Connecticut. Hey, Aaron, nice to have you here with Creedy and me. Happy New Year. How are you?
Doing great. Thanks for having me back, Carol. Happy New Year to both of you.
Well, so how do you make sense of what we've seen so far? It's just, 5, 6, 7, 8 days in the new year. We're trying to figure out the trend line. I think it's safe to say that it's going to be volatile this year, but who knows? Because I do feel like we got some clarity to some extent from the Fed in terms of what's to come. How do you see it, though?
Well, we're certainly moving into a very different economic, monetary, fiscal environment. We're going from peak growth, which was well above trend last year, 5.6 odd percent based on Bloomberg consensus, to probably something closer to 3.5 to possibly as high as 4%. But peak monetary stimulus and peak fiscal stimulus last year towards much more normalization. Growth's certainly coming down, but also the Fed is unwinding their asset purchases and raising the funds rate. And so, this downdraft, in my opinion, is about less liquidity in the system. It's probably about more volatility. We should expect that in an environment with less liquidity. And that should be an incremental headwind to PE multiples in the equity market. But that doesn't mean that all is lost this year. Earnings, we still believe, will prove positive, and we certainly are already seeing in the first several trading sessions of the year this sort of sector dispersion like we didn't see last year. And it's not just sort of growth to value, right? Because if you look at what's happening in the equity market, industrials are really doing nothing year to date, but energy's up over 14%. So it's
funny that you say that. I was looking at the S&P 500, the members, and like the 7 out of the top 10 names are your energy names, and you're talking about like some incredible gains. I think Hess was up, let me just look at my numbers, like 23, 24%. I mean, each of these names, you're talking some really, really strong gains.
Absolutely, and that's clearly driven by the commodity, which is having a very strong start to the year, up almost 10%. But there's a real question around whether or not the Fed's posture, the market's pricing in four rate hikes this year, will prove itself out, or whether or not they're going to ultimately need to put their foot on the brakes with that game plan. I have a hard time believing that this sort of 4 times this year, 3 times next year plan is going to play out close to that way.
Why?
I have a hard time. Well, I have a hard time believing. First of all, I think inflation will ultimately prove to be, yes, transitory, because supply chain bottlenecks are the cause to a great extent, of this inflation. And the headline piece of inflation we're seeing in the rising price of things like oil and natural gas. And that's the area, I think, on the headline, which may remain stubbornly high. But at the core, when we're looking at goods and services, it's a supply chain bottleneck issue that needs to sort itself out. And clearly Omicron, this next variant that is Omicron, has sort of stymied clarity on the reopening trade generally, both home and abroad. And I think it's really delaying this thawing of the supply chain, and it's keeping this inflation question front and center for everyone.
Right. So, Aaron, how many rate hikes are you expecting this year? The dot plot says 3. Goldman Sachs, JP Morgan say 4. Jamie Dimon says we need more than 4. Where are you on that spectrum?
Well, the short answer is I don't know. I'm not an economist. I look at the market as my set of sort of.
Does it matter? Does it matter to you whether it's 3, 4, or 5?
Well, no, it doesn't matter, but it certainly helps us. It informs us. So what's informing me on the market right now, as it pertains to that question, is where are long-term inflation expectations, where are long-dated Treasury yields, and what has the curve done over the last several days, months, quarters, and how does this inform us? And I think what the market's telling me is growth is slowing and is going back towards trend over the next year or two. Long-term inflation is not a concern. Short-term inflation is a significant concern. And if the Fed raises rates, they're going to adjust aggregate demand, but they're not going to solve the supply chain bottleneck issue. So it's not clear to me that this rate rise campaign of 4 this year, 3 next year solves the inflation problem. It will only exacerbate the demand side problem, could lead us towards a recession.
So it kind of sounds like you're in the camp of really what Stephanie Flanders was discussing earlier, Carol, in that the likelihood of the Fed getting this wrong is super, super high. What are your thoughts?
Well, I think there's certainly a risk, but I also think that we've learned through Chairman Powell that he's pragmatic, he's willing to pivot, he's not all that stubborn. And we saw that just a couple of years ago. He was initially, we thought, as the market did, that he was raising rates and too aggressively, and the market finally told him to stop, forced him to stop, and he did. And I think the market has a way of conveying these messages to not only investors but the Fed, and they'll do it again.
Yeah, that is the tricky
So in that sense, I'm optimistic.
Okay. Going to leave it there. Hey, Aaron, nice to check in with you. Aaron Kennan, he's co-founder, chief executive officer at Clear Harbor Asset Management, joining us on the phone from Stamford, Connecticut. Right now, as we've just got a few minutes left in the trading session, Creedy, we've got the S&P 500 just up about 14 points, Dow a gain of about 52, just fractionally higher there. Same story for the NASDAQ, up about 28 points. But I do feel like we're just taking a little bit of a pause right after some of the moves we've seen.
Yeah, and we got to mention the Russell 2000 because it's down 0.6%. So you're really seeing those small caps take it on the chin. Alongside yields about flat in the session. The bond market not doing a ton right now, but hey, probably waiting for those jobless claims tomorrow and more numbers on Friday.
Exactly. We're going to be, I think, on hold as we get through some more data points. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close on this Wednesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell, our global simulcast partners, Carol Massar and Kriti Gupta in for Tim Stenovic today, bringing together our Bloomberg television, radio, and YouTube audiences. And a kind of a mixed bag here in the market, Carol. I don't know if you necessarily call this a rebound. The S&P and the NASDAQ basically only up about 0.2%. The Russell in the red.
Yeah, it looks like kind of a tough EKG chart a little bit today. What's interesting, we just talked with Aaron Kennan over at Clear Harbor, and he says the market's telling him that growth is starting to slow down, and he has some concerns about potentially the Fed making a policy misstep, Creedy.
And that seems to be the consensus here, right? Like, is the Fed going to get this right? And are central banks around the world going to get this right at a time when the dot plot says 3 rate hikes? We're looking at 4 from Goldman Sachs and JP Morgan. Jamie Dimon saying we need even more. Where does the market fall into all of this, and how much kind of volatility are they really priced in for?
Yeah, I mean, earnings are going to be coming thick and fast. How many times are executives going to reference inflation? Going to reference, of course, all eyeballs on margins. But that CPI reading today, 7%, we swallowed it with not much volatility, really. It's only the dollar that's been a big mover.
I think it's so interesting we talk about inflation and the way that companies are responding. It was Michael Gapin over at Barclays earlier talking about the differences between inflation in the 80s, which was a multi-decade, almost a demand or a supply shock, demand story. And then, of course, Romaine, you get to today where a lot of this has been a supply shock, but demand is also filtered in through this, and nowhere near anyone is expecting it to last as long as it did back in the 80s. But that's the conundrum for a Federal Reserve when they can't fix supply problems.
Yeah, I wonder, though, about the repositioning, though, that we're seeing in the market. If it is repositioning, if it is a flight or not. It was an interesting story a little bit earlier about Cliff Asness and the idea of that value has sort of been outperforming growth, and he's sort of getting a little bit of time to crow, but not necessarily taking that. Some concerns here, I guess, about the persistence of where this rally can go next here. Here's your numbers right now. As we get the closing bells here in New York, the Dow Jones Industrial Average going to finish the day higher by about 0.1%. The S&P higher by about 0.3%. The NASDAQ Composite up about 0.2. And we should point out the Russell 2000 looks like it's going to end the day down by about 0.8% here. We also saw a lot of the transport names. We should point out Delta Airlines going to be tomorrow. The setup here, at least for right now, seems to be folks are expecting not necessarily the greatest numbers.
Yeah, we'll see what this does to volatility in the markets as we go through those earnings reports. But the VIX just down a hair, Taylor, in today's trade. We're looking at 17 and change on the VIX.
Yeah, you know what's interesting, though, Carol, is on a sector level, maybe this looks a little bit more green than it does red when we're trying to digest the breadth and the volume of today's trading. Some of this looks pretty risky if you're thinking about some of the auto components, materials, semiconductor equipment, software, services, capital goods. That feels like it's all up 0.5% to 3.3%. There are some winners that are even on the loser side of the screen, but I'll take you down to the real losers, and maybe it still is some of the flattening of the yield curve, which means it's the dividend financials that are some of the worst performers as well. You have pharmacy in there, and then you get some of the conservative ones, right? Like the food and beverage, the food and staples, those traditional sort of defensive stocks also in the red today.
All right, let's talk about what's in the green in terms of specific names. Take-Two Interactive, that was among your top in the S&P 500. Romaine talking about, I think you talked about this. No, actually you talked about Dish earlier, but let's talk about Take-Two. Up about 5.2% in today's trade. Upgraded to outperform from market perform over at BMO Capital Markets, citing the company's plans to buy Zynga. They seem to like it. Analyst has a $180 price target on the company. 156 and change is where it closed today. Let's talk about some of those chip names. AMAT, 4.7% higher in today's session, top among the NASDAQ 100. Price target raised to 165 from 150. 150. Over at Barclays, stock closed just below 160 today. Analysts see positive outlooks providing some relief for that company. Dish, Romaine did mention it earlier.
I
Dish
did mention
Network.
that. Thanks for listening.
You're welcome. I do listen. I hang on every little word. Dish up about 2.8% in today's session. We know this came out of the New York Post, citing some sources, once again saying that DirecTV and Dish may be talking about some kind of new talks to merge, essentially. But I guess we'll stay tuned, Creedy, for this one, see how it plays out.
Yeah, well, Carol, you got the gainers. Well, I've got the decliners. One of the big movers today is going to be in the biotech space, Biogen in particular, down to the tune of 6.7%. It was down as much as 10% earlier in the session. One of the biggest weights in the S&P 500 early on. The U.S. government limiting Medicare coverage of its Alzheimer's disease treatment and similar drugs to patients enrolled in clinical trials. Remember, this is a very controversial Alzheimer's treatment getting rejected in Europe and Japan, but approved in the FDA and now facing some of those limits from the U.S. government. Moving on to PayPal, though, getting downgraded over at Jefferies on a worsening e-commerce trends as shoppers return to brick and mortar stores. Those shares down about 2.3%. I guess people just don't need a digital payments network if you can just swipe your credit cards. It's something to watch in the fintech space. I'm going to use Goldman Sachs as kind of this proxy for banks entirely because those were actually down 3% today. Using this as a proxy, like I said, which have had quite the run up in yields, especially as earnings season kicks off on Friday. So look like a little bit of pairing those gains when it comes to today's move.
Tell you what's also on the downside. In fact, if you're looking at the global macro movers here on the Bloomberg terminal, there's one key bit of red that stands out to me. Bloomberg dollar index off by 0.6%. Worst day for the dollar index since May, which I think speaks more to the lack of volatility that we've seen in the FX space in most of 2021. But the dollar goes weaker as, well, we digest the 7% inflation rate and think actually we've already made our move. We've already decided where treasuries have got to go if we are anticipating 3 or 4 rate hikes for the year. And we move on, the dollar index down by 0.6%. What's interesting is one thing on the higher side, the Swiss franc, the yen, some feeling that this is some sort of actually risk-averse trade that's going on, a little bit of a search for a haven as we see tensions between NATO and Russia not looking that great amid the Ukraine standoff. We're looking at Norwegian krone up 1.6%. Why? Well, that speaks to what's happening here on the commodities vertical. I'm looking at what's happening in terms of WTI crude, $82. Now we see oil continue to ramp up as those supplies are looking on the limited side, the inventory levels low. Talking about what's moving in commodities, natural gas. 13% higher. We got used to those sorts of moves over in Europe. Natural gas in the US pushing higher as we expect those storms, that cold weather, and a record run up in natural gas prices so far in 2022. And sovereign bonds, well, yields actually lower globally. Japanese 5-year yields going lower, Danish ones, Greek ones. Similar sort of a theme in the US, Taylor?
Yeah, at least in the belly of the curve, as Romaine says, you're getting a stable here on the 3s and the 5s, but you go forward to the 2s and then going long out on the end of the curve, the 20s, 30s, and that's where yields are actually, do we call that sort of the butterfly, right? Yeah. You're up now to 91 basis points, and the 20s and the 30s are well up above 2% as well. And I think this is the conundrum, Carol, when you're thinking about pulling forward some of the rate hikes, the long end typically would flatten if you're trying to cool off inflation and cool off growth. Most of the analysts, though, that we've spoken to today says the 2, maybe even Conrad de Quadros at Brain Capital saying 2.25%, you could see the path to yields higher to that point. But that's the level when then it really starts to get attractive, and particularly the foreign buyers, they'll start to step in.
All right, guys, we've been talking for days, looking forward to that CPI print. We got it this morning. So now let's talk about what's to come this month, or this week, I should say. We've got jobless numbers coming out. We've got PPI. Is there anything out there that you think could possibly move the markets here?
I don't think it's, no. The short answer is no, but I do think the PPI numbers are something to watch because we talk a lot about how companies are going to react this earnings season with regards to their commentary, whether they're able to pass some of those costs on. And we know PPI has been running a lot hotter than the CPI number, something I think we're expecting something close to 10% here. And the idea here is if these companies don't have the power to continue to sort of either absorb those costs or pass those costs on to the consumer, then, what does that mean for corporate earnings?
So exactly. So is it, if you're not expecting retail sales, which are only for December backward looking, if you're not expecting PPI to be moving the market, is it therefore earnings season that moves the market, Romain? Is that what you're anticipating is going to be our next catalyst of change?
I think so, because it really all boils down to how these companies held up. And they sort of defied a lot of expectations. I think, Critty, somebody was on our program a little bit earlier talking about some of the hard comparisons that we're going to have too. And I think that's going to really rattle the market too, because, a lot of people, they sort of look first and then ask questions later. And, they're going to see the comparisons and they're just going to freak out.
I'm curious, though, how much of an impact the UMich sentiment adds on to all of those concerns. Caroline, you mentioned retail sales. Romain's talking about those producer prices. But I think at the end of the day, the consumer is really what matters. Are they confident in an economy that is running so hot? And are they confident in a Federal Reserve that is now being priced in to have 4 rate hikes this year? Of course, we know that affects things like
right now?
I am not the bellwether for sentiment, but I will say that...
does this only measure sentiment in Michigan, or how does that work?
It is a consumer, at least for now, on a serious note, Romain, that has not pushed back on price increases as of yet. It's a consumer that, given the wage increases, they've been willing to take some of the price increases for the goods that they've been purchasing. Though, again, as we bring up with the real wages now negative, 2.5%, you do wonder, Carol, how long that lasts.
Yeah, and as consumers draw down on their bank accounts and other stimulus that they've been able to sock away, how does that impact ultimately demand going forward? All right, folks, that's going to do it for our cross-platform coverage on radio, TV, and on YouTube. Thank you, Romain.
Hanging on your every word still.
I guess
she's worn a turtleneck 2 days in a row.
I have about 5 or 6 or 7 of them, so get ready for more.
I need
folks,
some.
We'll see you same time, same place tomorrow, everybody.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I do have a lot of turtlenecks. They're all the same one. I buy them in every color because it's so cold in this studio.
I don't blame you. I think I have like 3 sweaters on the back of my chair, a couple of scarves stuffed into my drawers.
I remember when you first started joining me in co-host, you'd be like, you'd run away and go get a sweater or something.
Oh, yeah, I still do.
It's cold. It's cold. Interesting coverage in terms of the markets. It did feel like we took that CPI print in stride. We're going to be hanging on every data point, but I think earnings are going to be key. KBW Bank Index already up 11% this year. Let's see with what we get from those big banks. Is there more momentum to go, or is it already priced in?
Yeah, 11% this year. But today, for today's session, a lot of these big banks, Goldman Sachs, Bank of America, actually down on the session.
Yeah, so that's good to know. Certainly ahead, and as we get ready for all of those numbers. All right, you're listening to Bloomberg Business Week. Kriti Gupta, Carol Masser. Now let's get over to Nancy Lyons with a check on world and national news. She's in D.C. Hey, Nance.
Thanks, Carol. President Biden is taking credit for the strong economic rebound, and now he's also fielding blame for the highest inflation in nearly 4 decades. Bloomberg's Irv Chapman reports.
Price increases compared with the previous month look better than compared with the previous year, Brian Deese, who chairs the White House Economic Council, noted in a Bloomberg interview.
We did see a deceleration month over month. Deceleration, for example, in the price people are paying in the grocery store. We saw a reduction in the price of gas. Supply chain bottlenecks are still elevating prices. Goods are moving with increased fluidity through our ports, and that's starting to have an impact.
He said 1/3 of the increase in the price index was attributed to cars. The remedy is more computer chips, but he concedes it will take time to step up their production. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is coming under attack from Senate Minority Leader Mitch McConnell for a speech that Biden made yesterday pushing for passage of voting rights legislation, even if it means changing the filibuster rules.
To demonize Americans who disagree with him, he compared, listen to this, a bipartisan majority of senators to literal traitors.
Senator McConnell has recently been called out by the White House for supporting voting rights in the past, but more recently refusing to let the Senate even debate such bills. The January 6th committee says it is now seeking information from GOP leader Kevin McCarthy, who spoke with former President Trump as the Capitol attack was unfolding. Members say they'd like him to voluntarily provide them with information. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Carol Masser along with Kriti Gupta here in our Interactive Brokers studio. So interesting story about Jennifer DeLuey on the Bloomberg, and it talks about Long Island, particularly what they're doing in terms of offshore offshore wind power lines. I think it's safe to say this might be an interesting year in terms of electric vehicles, but also as we continue to move forward on climate initiatives.
When I think wind turbines, I think California. I even think, say, solar panels in Texas, especially. But this is really interesting because this time a lot of this initiative is coming from federal funding, billions of dollars of federal funding, about $10 billion earmarked for states, tribes, and utilities to enhance that grid resilience, prevent power outages, and extreme weathers and wildfires. That's going to be a major factor when it comes to Colorado, California, who are seeing that extreme weather.
Exactly. It's really important. And what happened, the Biden administration today outlining an array of initiatives to advance clean energy. It included plans to hold the largest ever sale of offshore wind farms, the rights to that in U.S. history, and also accelerate the construction of new power lines to transmit renewable electricity across the nation. It spans at least 7 federal agencies, so talk about coordination, and it could help fulfill the president's climate ambitions to decarbonize the power grid by 2035 and at least have U.S. greenhouse gas emissions by the end of the decade. Listen, the race is on globally to deal with this.
The race is on globally, and this is something that even the market, I'm putting my market cap back on, Carol, I have to.
Well, but you think about the money that's been going into ESG, and a lot of people would argue that we need some more clarity about some of the different layers of that and really understanding what you're investing in.
And if you actually compare the companies that are in wind versus the companies that are in solar versus, say, water turbines, for example, wind power is actually outperforming in the ESG space, which is interesting, right? You wouldn't think that.
Why is that?
Your guess is as good as mine, but a lot of it has to do with that federal and state funding.
Yeah, and government policies, whether it's tax breaks or initiatives or money being allocated to certain areas, can certainly show up when it comes to market participants. All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Well, the equity market was higher today, but we finished off the best levels of the session. The day began with word that retail inflation grew last year at the fastest rate in about 4 decades. Consumer prices, measured by the CPI, jumped 7% in 2021. Shocking as it may be, that was in line with market expectations. And it kind of underscores the bet that the Fed is going to begin raising interest rates very soon, perhaps as soon as the March meeting. 10-year Treasury last quoted in New York at 173. The Dow was up 0.1%. We have the S&P 500 higher by 0.3% on the day, and the Nasdaq Composite better by about 0.2%. In spite of the stability in the bond market, there was a lot of dollar weakness today. We had the Bloomberg Dollar Spot Index down 0.6%. So as we get set for trading in Asia, looking at a stronger yen, stronger offshore Chinese currency, and interestingly, given the rally that we had overnight in Hong Kong, those ADRs, shares that trade here in the U.S. of Chinese-listed firms, they were higher today. The Nasdaq Golden Dragon Index jumped about 1.8%. Unlike what happened today with inflation in the U.S., the readings overnight for China on both wholesale and retail inflation were below estimates, and that creates a little bit of room for the PBOC perhaps to do some policy easing. I'm Doug Prisner, and that is your Bloomberg Business Flash.
All right, Doug, really appreciate that update. You're listening to Bloomberg Business Week on this Wednesday. Carol Massar, along with Kriti Gupta. We are in our Interactive Brokers studio, and we do want to get to our next guest because I feel like it's safe to say, Kriti, your chart was about this. A day, an hour doesn't seem to go by without us talking about supply chain imbalances. We heard Jay Powell talk about it yesterday in his Senate confirmation hearing. Lots of questions continue to be out there. Back on Bloomberg Radio is someone who's got a vantage point when it comes to companies' supply chains. Jennifer Basigley is founder and CEO at the supply chain management software company Interos. They're based in Virginia. She joins us on the phone in New York City. Jennifer, nice having you back with us on Bloomberg Radio. How are you? And tell us what's going on, what you're seeing. I think the last time you were on was about a year ago, and you did talk about a perfect storm for supply chain disruption around the globe. You were spot on. So curious what you're seeing today.
Hi, Carol. Thanks for having us back. And we're busy, as you can imagine. Things have continued over the months. I think that the education for the global economy, companies and countries around the world are realizing they are only as strong as the weakest link in their supply chain, and we really haven't hit the end of it yet. And I think with the latest wave of the variant Omicron and a lot of us going back home, you're still seeing a major surge of goods throughout the global supply chain, which is causing a lot of uncertainty and a lot of stoppages.
So what are you seeing, I guess, now in terms of how your software works? What's the best data to track? Walk us through kind of the process of hunting this stuff down.
Yep. And so what Interos does, in its most basic, is we have a technology platform that ingests massive amounts of data and uses artificial intelligence to map, monitor, and model supply chains in real time to help our customers, preempt disruption and identify different types of risk. And so some of the things that we're still seeing are a lot of concentration risk, a lot of over-reliance in certain industries. We're also seeing a lot of need to find alternative sources of supply. So again, as the pandemic continues, you still hear a lot of conversation about reshoring, which to me is just, I need to find more than one source of supply for a product at any point in time. You're also seeing what's called the bullwhip effect, whereas little spikes of demand, whether it be based on food supply because everybody's cooking out of their house, and I don't know about you, but I went to the supermarket last week and the shelves are bare. It's because so many of us are now cooking at home versus going out at restaurants, and these are the things that just haven't smoothed out yet. So from a what Interos does,
Kriti and I were just talking about cooking.
I was going to say
behind the scenes, we were just talking about cooking and cooking at home because it's getting pretty expensive to order out constantly.
Yeah. It's expensive and it's getting harder because, again, we're all trying to hit the same sources of supply. And if you think about the restaurants, they got hit very hard because so many of their employees got sick, the Great Resignation. So I just keep going back to, even though our technology continues to map and monitor the global supply chain, we really haven't seen the smoothing out yet. And I think we're still a good 12 to 18 months from that be resolved.
Yeah, Carol was very clear. She was like, "Do you cook?" And I was like, "No." She's like, "Did you get takeout?" I was like, "Well, I try.
You cook some pasta. You did talk about that.
I cook pasta. That is my one skill in the kitchen." You know what's interesting here is I'm just going to kind of give you an anecdote on my takeout adventures now that's come up. But sometimes I will get takeout, and sometimes they'll have an hour-long wait time because they can't find someone to actually deliver it to my apartment. Now I am lazy enough that I will actually wait the hour and not walk the 2 blocks. But
been there. I feel your pain.
But I guess my question for you is how long do your indicators really say that these things are going to last? Like some sectors are saying it's transitory. Chip makers, for example, we discussed that earlier in the show. Others are saying this is going to last a while. The Federal Reserve is in that camp. Talk to us about the timing.
Yeah, I think if I were to look at the personal crystal ball, I think we're a solid 12 to 18 months for a lot of the smoothing to occur. I think we need...
Wait, how long? Say that again. How long?
12 to 18 months. I think it's through 2022 into 2023. I think that you have to get people healthy back to work. You have to have folks getting back to whatever jobs they're going to sign up to have. You have to have just the supply chain to level out. With everybody working from home, you had this massive surge that we've not seen since World War II of people bringing hard goods through the supply chain, and our shipping and our logistics networks simply weren't ready for it. And so until people get back to work and until things smooth out a little bit, you're still going to see this over-reliance on hard goods versus services, which is why it's going to take a while. I think the last point is that we're seeing a massive uptick from a business standpoint and more companies investing in technology to ensure that they are getting the trust and the transparency in their supply chain in a way that manual surveys and humans just can't keep up with the changes. And those investments will happen in 2022, and then the real benefits will start happening in early 23.
It's funny, you just talked about the reliances on hard goods versus services. We were just talking about that with Aaron Kennan, too, about kind of that shift ultimately that we see in the economy. Hey, Jen, so good to check in with you. Jennifer Bisegli, she's founder and chief executive officer over at Interos. They're based in Virginia. She joined us on the phone in New York City. But 12 to 18 months, that makes sense. Like, we were just talking about the data points. I do feel like it's going to take another year to get some real true clarity, and this is the trouble. Central banks have to kind of make some guesses about what to do.
Yeah, it's convenient that those 12 to 18 months are also when all those rate hikes are priced in. What got me about what she said was the food prices in particular, because this is something you heard from Albertsons. You hear this from emerging markets, Mexico, for example. Those chief costs, they're driven by those surging food prices.
No, it's really significant. All right, folks, you're listening to Bloomberg Business Week right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
As if we didn't hear from enough Fed people this week, Kriti Gupta, we're hearing from another one.
Yeah, more on inflation, more on the urgency of tackling it now, coming from Federal Reserve Governor Lael Brainard.
Yeah, and she's going to be up testimony tomorrow. Her prepared testimony remarks, they are crossing. Doug Krisner, let's get to you. She's talking about inflation.
Most definitely, and she is saying that slowing too high inflation is the most important task for the Fed. This on a day when we are learning that retail inflation grew in the year 2021 at the fastest rate in about 4 decades. That CPI number was up 7% for all of last year. Shocking as it may seem, it was in line with market expectations, and it essentially strengthens the notion that the Fed is going to begin raising rates perhaps as soon as the March meeting. Now, the bond market is already pricing in 90% probability of 4 rate hikes this year. The equity market was higher today, but we finished well off the best levels of the day. The Dow up just 0.1%. The S&P had been higher by 0.8% earlier. We end with a gain of about 0.3%, and the NASDAQ composite higher today by about 0.2%. Yields, very little changed at the end of the day with the 10-year Treasury last quoted at 174. But what we did see is this breakdown in the correlation or the relationship between Treasury yields and the dollar. We had the dollar drop to a 2-month low today with the Bloomberg Dollar Spot Index down about 0.6%. Flip side of that, a much stronger yen here at 114.60 and an offshore Chinese yuan that is strong as well, strengthening by about 0.3% against the greenback. Big day for crude oil after the API reported a drop in U.S. stockpiles beyond what was estimated. Here we are in extended trading, WTI 82.80 with a gain of nearly 2%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug Krisner, thank you so much. Well, our next guest is an entrepreneur turned investor. She's the founding partner of Parliament Ventures and thinks American VC needs to be pouring into Asian markets to propel innovation, tech, and finance. It really needs to be more diverse in all ways. Diane Yu is with us to join us with more on her thinking. She's on the phone in New York City. Diane, nice to have you here with Kriti and myself. How are you? And tell us a little bit about your company and what you're focusing on.
Hi, everybody. Yes, thank you for having me on today. Parliament Ventures Fund, and in my history, my experience as an American VC working with the Asian markets, I have over 40 investments with 2 unicorns. And as a fund founder to angel networks, investment clubs, and venture firms, the last in a partnership with the largest medical center of their innovation arm, I work with a lot of Asian markets. I am the official U.S. partner to the Korean government, where I see over 1,000 deals on a yearly basis and advise 50-plus probably investment deals. And so that's what I do at Parliament Ventures.
Diane, talk to us. First off, I'm just reading your bio here. First off, you are a fellow Texan, so shout out from me as well. I grew up in Dallas, and I'm also seeing that you were formerly the managing director of the Rice Angel Network, which also I was an intern at an Angel Network. So this is, I'm learning so much about you. We're bonding on the radio. This is great. But I really want to ask you, sorry?
Yeah, that's incredible.
That was incredible. And on top of that, just the cherry on this pretty great Sunday that I think is that we're both Asian American, which I think is pretty cool. Like I said, bonding on the radio, folks. You're seeing it live. But one of the questions I really want to ask you is what one of the hurdles are for, I say, Asian Americans getting into the space, because, of course, this is a growing space that's very, very fast, especially all across the country. What are the challenges that you see?
Absolutely. You know, one of my passions is really putting more Asian American executives, woman executives at the top level of finance and venture capital. And so I have actually a media platform called Identity Unveiled, which is a passion project. And out of that, we have interviewed countless Asian American women executives and hearing their stories and putting it out there to inspire so many other women. You know, what I'm hearing, one of the common denominators is there was no mentor before me. I was the one that broke that glass ceiling. And so putting those stories out, we truly hope to inspire and empower more Asian American women to get into these executive positions. As you know, there's a huge absence of that there.
Well, what's interesting too, right? And Diane, we talk about this, that we know by having diversity on boards and in senior management, it can impact positively a company's top and bottom lines by excluding people in your management, if you will, or in the investment decision-making process, or by ignoring markets and not being as inclusive. You really are missing out on opportunities.
Absolutely. And, actually, did you know, females, we make up half the population here, are actually the highest performer. That comes at no surprise, financial performance on venture capital, on entrepreneurship. So it's a really great deal. I think there should be more women at the top levels in executive positions.
So why isn't there? Is it, I know people say pipeline issue. We had a great guest yesterday who's talked, it's not just about, necessarily just general pipeline. There's things deeper than that.
There's so many reasons. We need more champions out there, not only opportunities, but I think organizations like, there are many organizations out there that are helping, what do you call, accelerators, think tank and hubs, and opportunities to create these pathways for women. And I really think we have to go hand in hand and work with the executives existing there, and also create more opportunity to surrounding these women with these stories. And that's what we do at Identity Unveiled, actually. And so really getting the stories out there, and it's also being the most excellent at what you're doing. And we're seeing that even in the venture world, for example. Less than 2% of women are VC backed in this billion-dollar universe, right? Less than 1% goes to BIPOC, people of color that are women. It's an incredible stat, and we hope to change that, and that's why I'm here today.
Well, talk to us about this kind of two-way street. I think we have about 30 seconds here. Talk to us about this two-way street here in investing in Asian markets, but also American VC funds benefiting from foreign investments. It kind of works both ways.
Right. So, how can U.S. VC firms benefit from foreign investment? A key role of VC firms provide portfolio companies expertise, networks to prepare for that exit, IPO acquisition. And so a lot of these foreign investors will provide access, companies that will invest will provide access and generate better exit opportunities for the company. Asian markets are leading tech economies. With the top four are China, Japan, India, Singapore. They provide really promising, sustainable and investment destinations. And some of the benefits that come out of that obviously would be tax, location, cash grants, employment for foreign investors to continue expanding, but more so the demand of goods and manufacturing produced by these economies of scale will also strengthen these industries. But lastly, American VCs will have access to other large economies in Asia. As Asian economies, hub economies, or the tiger economies rely on their surrounding countries to build stronger investment economies. So this will then diversify this.
Diane, sit tight for a second. We have to do a little bit of news, but we're going to continue come back to you, and we'll continue our conversation. Diane Yu, she's founding partner at Parliament Ventures, with us on the phone in New York City. We'll get back to her in just a moment. Right now, we do need to head out to Washington, D.C., and Nancy Lyon with an update on world and national news. Hey, Nance.
Thanks, Carol. We are not out of the woods yet. Federal health officials say the number of new COVID cases is still on the rise across the country, with CDC Director Rochelle Walensky calling it staggering. But despite the spread of the Omicron variant, the White House team says it is not necessary to lock down schools and businesses. To help matters, response coordinator Jeff Zients says they will increase the number of tests provided in the nation's schools.
So today we're taking additional actions, including sending 5 million free rapid tests to schools each month, providing another 5 million lab-based tests each month.
Zients says the goal is to ease supply shortages and promote the safe reopening of schools. The House committee looking into the January 6th insurrection is asking to interview the top House Republican, Kevin McCarthy, about his interactions with former President Trump as the riot was unfolding. He is the highest-ranking lawmaker the panel has requested to speak with. 2 weeks after his death, lawmakers today paid tribute to late Senate Majority Leader Harry Reid as he lay in state at the Capitol today. The Nevada Democrat died in December after a battle with pancreatic cancer. House Speaker Nancy Pelosi spoke at a special ceremony.
God truly blessed America with the life and leadership of Harry Reid. Leader Harry Reid, may he rest in peace.
Pelosi calls Reid a consequential majority leader. President Biden missed today's ceremony in the rotunda, but he did pay his respects later this afternoon. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. with World and National News. Kriti Gupta, Bloomberg Markets correspondent, Carol Masser in our Interactive Brokers studio. We are also streaming on YouTube. You can catch us there. We're going to get back to talking about VC with founding partner of Parliament Ventures, Diane Yu. In the meantime, Lizette Chapman has a story that caught our attention. Talk about startups, Kriti, raising more venture capital funding than ever last year, and more cities around the world starting to look like tech hubs, although Silicon Valley remains firmly in the lead. I always think about when it comes to the economy, you follow the market so you can read into different market indicators, what it says about the outlook, the financial outlook, the market outlook. Yeah. I love seeing what's going on in startups. Maybe is another indicator.
Yeah, and you know what's interesting is that we're looking at $621 billion spent in 2021 on these startups, essentially as people try to find the next Apple or the next Intel at, say, $6 a share. These companies that have now become these kind of huge diamonds that, those early investors really profited on.
Well, digging into the data even a little bit more, the U.S. accounting for about half of the world's funding total, startups in the United States raising about $311 billion, according to this report. This was research firm CB Insights. I also wonder, too, right? Money has been so cheap, so much liquidity out there that money's chasing a lot of things. So how much of this ultimately, I mean, the VC world, you often throw a lot of money at a lot of different things and a lot of it goes nowhere, but I do wonder how much of it is just trying to find a home and ultimately will amount to nothing.
Yeah, I mean, and this is crucial about where the money is actually going, because we're talking about Silicon Valley. We're talking about New York, for example, for what was a classic Wall Street. But also keep in mind, there are other hubs. I'm thinking Miami, Austin, cryptocurrencies that are also attracting a lot of money. Once again, the sentiment here that people believe they're going to find the diamond in the rough.
Yeah, exactly. And as we talked about looking for clues about what comes next in our economy, early stage funding is an indicator of a healthy, growing startup scene and gives you some clues about what's to come. We're going to continue talking about the startup scene. We're going to do that. Get back to Diane Yu of Parliament Ventures. We'll get to her in just a moment, right here on Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The day began with a major piece of economic news. Retail inflation grew last year at the fastest rate in about 4 decades. This is the Consumer Price Index report. CPI was up 7% for all of last year, and that was in line with expectations, but it does fortify the bet on the Fed raising interest rates, maybe as soon as the March policy meeting. Little movement in the bond market today. 10-year Treasury last quoted at around 174. The equity market was higher, yes, but we finished off the best levels of the day. The Dow ahead just 0.1%. The S&P better by about 0.3. NASDAQ comp picks up about 0.2% on the day. Now, tomorrow, in terms of eco data, we'll get weekly jobless claims along with a report on producer prices. Also tomorrow, the U.S. Senate Banking Committee will hold confirmation hearings for Lael Brainerd. She's been nominated as Fed Vice Chair. A short while ago, we got a few of her prepared comments, one indicating that slowing too high inflation is the most important task for the Fed right now. The equity market is also going to begin to shift to the earnings story later in the week. Tomorrow, we're going to hear from Delta Airlines, and then Friday, among the banks, it's Wells Fargo, Citigroup, and J.P. Morgan. Focus on the loan growth figures. And we're also getting information that the investment firm Blackstone has sweetened its offer to take over the Australian gaming company Crown Resorts. This new bid, $13.10, that is per share in Aussie dollars. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Do you know yesterday was Learn Your Name in Morse Code Day?
No, I didn't know that.
I didn't either.
Da.
Nicely done, Doug Krisner. All right, Doug Krisner with the Bloomberg Business News Flash. Want to get back to our guest, Diane Yu, still with us, founding partner of Parliament Ventures. She's still with us on the phone in New York City. Diane, we recently caught up with Alan Patrikoff. He's been in the venture capital space for 50 years. Love talking about him and investments, early investor in Apple Computer when it was still Apple Computer, not just Apple. You mentioned that you've made over 40 investments, including 2 unicorns. Tell us where you're investing, where you find the opportunities, and I know you are doing it in a diverse and inclusive way.
Yes, absolutely. So the last one I did was a medical fund, and currently we are investing in actually very multiple industries, but really consumer now tech. As COVID and the pandemic opened a window of opportunity, that was really where we invested in and closed out the last fund.
So,
and Asia, actually, in Asian markets, for example, the leading ones that we're focusing on right now is biotech.
Biotech. See, it's interesting that you mentioned biotech, because I was about to say, hey, talk to us about the tech, especially in Asia, where a lot of that big tech innovation is merging. Hey, it's actually been a big sticking point in terms of the relationship between the U.S. and China in particular. Talk to us a little bit about how you find those opportunities, those diamonds in the rough.
Absolutely. Well, just for the sheer numbers, Asia dominates the top 10 countries in the world with the highest tech expertise, right? Korea, Japan, Singapore, and China. And so, really, it's how do you get into these markets? Is I'm actually an official U.S. partner to the Korean government agency. We're focused on meeting over thousands of deals, and face-to-face, I've probably done over 50 maybe deals in terms of advising them on how to get investments in the U.S. market. And so if you're a VC trying to get into the U.S. market, it would be great if you get boots on the ground, right? Having a lifetime of the very best deals in that Asian market. And the VCs in Asia, they always have firsthand access. So get those partnerships and teams locally in that region. For example, Sequoia Capital China is a great example of how they funneled capital into the Asian market. And they invested very early into these startups, strategically owning large stakes in the high-profile Chinese IPO. So this position, for example, made for enviable foreign venture capital.
So now I'm curious, what are the challenges that come with bringing that foreign investment into the United States? Because it can't be easy in a country that's already seeing so much talent, so much kind of deals being attracted from around the world. What are the challenges that are involved in that process?
There are a lot, for example, even in the medical, let's just keep it easy and simple, right? The terminology of what stage are you in is different, right? Valuations can be different. And then there's a lot of regulatory issues that we have to deal with as well. So it's always great to have boots on the ground, build a team there as we have and are continuing doing so.
So it's interesting. So what might be surprising? You mentioned that you're a U.S. partner to the Korean government agency that's focusing on venture capital acquisitions and doing consulting on those early stage companies. What are some of the trends that you are seeing? Because first of all, I love emerging world. Like I think about Africa and some of the things that they've done using their phone to be able to actually have a financial identity. So what are some of the interesting trends that, whether it's innovation, disruption, that are going on in Korea that might surprise some of our audience?
During this pandemic, it's truly opened our eyes to see what the tech world is being thrown into this pandemic and what can come out of it. And so, Korea, for example, has really been a resilient country and has, in the midst of all these teetering economies as we close out the year end, they continue to be strong. And again, those industries, for example, are semiconductor, manufacturing, and also really big is biotech. The president of Korea has positioned Korea as the next, and really in Asia, global biotech hub for a lot of foreign investments to come in. And so we're seeing a lot of that in terms of investments in Korea.
That's fascinating that you're talking about biotech, bringing biotech into the United States when you also have that same sentiment coming from Europe. A lot of European biotech trying to break very aggressively into the U.S. markets.
Right.
Talk to us a little bit about how, say, you have to compete with other parts of Asia, India, China, Russia even, if Russia counts as Asia, and in terms of where these deals are actually coming from.
Absolutely. So another way, if you turn it the other way around, when we're investing in these Asian startups, we work with not only that country, but a motley of countries that surround it. For example, the emerging markets of Asia, in the Philippines, we'll work with Singapore and Vietnam and Malaysia, the tiger cub economies, as you would say, because they need more foreign investment to really pull up that venture ecosystem. So, when you're investing in some of these companies, you're really getting to work with a bigger picture of some Asian economies pulling in with co-investors.
When you look at what's going on in the startup space, and we just did a story, Diane, about the record number of startups that we saw in 2021. In fact, the amount of money, startups raising more venture capital funding than ever last year, more cities around the world starting to look like tech hubs. Silicon Valley, though, still in the lead. We look at early stage funding as an indicator of a healthy, growing startup scene. It gives us some ideas, too, maybe of another market indicator. When you look at what's going up in the startup world, what does it tell you about the outlook?
There's incredible opportunity, and I think the pandemic has afforded a window of investment opportunities, and for us to go into these stable environments where in Asian markets where they're leading in tech, I think that's where we should put more investment. For example, the United Nations has awarded Korea #1 for their investment promotion award. They have birthed incredible investment destinations by being so forward-thinking in digital, future thinking on the digital side and high-tech global leaders and birthing more people there. So truly, by investing in Asian markets, we're just going to spur more growth and development and opportunity to invest in.
Well, nice to check in with you and really shed light on something we don't talk a lot about, and certainly sounds like we should. Diane Yu, she's founding partner at Parliament Ventures, on the phone in New York City. Off to the nation's capital, and Joe Matthew of Sound On. What do you got coming up?
Well, we're going to be talking with Congressman Don Beyer, who is chair of the Joint Economic Committees, a Democrat from Virginia, just happened to write a little amendment about NASA that could end up being a voting rights bill. We'll explain how that's going to happen coming up.
I'm guessing it's not so little, huh?
It's so wonky.
Wonky, we love it. Joe Matthew, have a good show. Host of Sound On coming your way in just a few minutes. Kriti, great to have you here. Thank you so much.
Thanks for having me. It's been fun.
It's a pleasure. Kriti Gupta, Bloomberg Markets correspondent. Have a safe and good evening, everyone.